Morning, Steve Freer in Chicago with the morning grain comments. A lot of data out overnight. It's raining here in Chicago, and so the markets are taking all this information as a little bit negative, mostly because of the USDA did not lower crop ratings for corn and beans last night. So that's offering some weakness in the market. We're looking at November beans down about 5 cents, September corn down 5 cents, and wheat down about 11 cents. I think the big thing is overnight we saw that the USDA increased the corn ratings 69% good, excellent. Last year we were 75, and silking is about 12% done. The 5-year average is 18%. For soybean plantings, 96% done. The biggest one is Missouri, 73% only planted. They've got about 2.3 million acres still left to be planted. Some people think that maybe as much as 1 million of that may not get planted. Bean conditions unchanged, 63% good to excellent. Last year was 72. And we also saw that spring wheat and winter wheat ratings dropped. We did note that the winter wheat harvest jumped 17 points to 55% done versus 59 average. Hard wheat conditions remained about unchanged, maybe a little bit better, while soft wheat conditions dropped in Illinois and Indiana, and some talk about lower ratings in Ohio and some problems with quality there. Overnight, rains across much of the western corn belt, down into Texas and Oklahoma. Today the rains are in Illinois, Indiana, and the line down in through Missouri and Texas. 6 to 10 day outlook calls for below normal rains and above normal temps. The 8 to 14 day, though, comes in with normal to below temps and mostly normal to above rainfall, except in the southeast where it still looks like it's going to remain dry. Big news yesterday was that the funds are now long 64,000 beans, 39,000 meal, 26,000 oil, 70,000 corn, and still maybe short a little bit of wheat. And that is a big surprise to the marketplace, as they bought a record amount of contracts last week. We did see one crop watcher lower his yield, the U.S. corn to 163. That's down 2 bushels from his previous number. He lowered beans 1.5 bushel to 43.5. Areas of concern is obviously too much rain in the eastern corn belt, nitrogen leaching in the corn, shallow roots, and the dry southeast. He also noted that looking at Brazil, talk about the Brazilian farmer in 2016 could increase acres down there due to this rally in prices. We've got the supply and demand on July 10th. I think for the most part, for 14 and 15, people are looking for the corn carryout to drop, both and soybeans, due to the stocks report that came out suggesting a little bit higher demand. For 15 and 16, we could see lower carryouts for corn and for beans, especially beans, if they decide to lower the yield. On the wheat, though, we could see a little bit higher carryout than what the government said. So scrambling all that globally, you could see world bean stocks drop. World wheat stocks could also drop if they decide to lower production in countries like Canada, Europe, and Russia. And the corn stocks will probably stay about the same. So wet weather in Chicago. The forecast is a little bit wetter today, long term, and we'll just see how much funds want to take out of this big long position that they added last week. Outside markets are a little choppy, trying to figure out if the Chinese economy is slowing and figure out what's going on in Greece and how that affects the EU. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.